All righty. Well, welcome everybody. It is another beautiful Tuesday on this September 17th. And this Tuesday is particularly special because we have a AMA session that we're running today. We call it Tax Tuesday, and essentially what it is, it's a tax AMA. It's an Ask Me Anything session. So you can ask me anything about business formation, accounting, best business practices, things like that. What should I do with my tax bill? What's an S corp? All the questions you can think of, I can probably answer them. And just to introduce myself, my name's Luke, and I'm a business advisor here at Collective. And Collective is your all-in-one online platform designed for self-employed people. We'll handle the whole shebang when it comes to the financial aspects of your business. So the first thing we do is form your business if need be. We'd set up an LLC, make an S corp election, and then from there we'd handle your payroll, your ongoing accounting, ongoing tax support throughout the year, and then tax filing at the end of the year, business tax filing at the end of the year. So we pretty much do the whole shebang. And also, it's important to note that just consider this information. Don't consider this official tax advice or legal advice or anything like that. It's always a good idea before you act on any of this information. Speak to a tax attorney, speak to a CPA or some sort of tax professional before you act on it. But let's go ahead and jump into this, and let's talk about tax. Okay, here's the first one. I missed last night's deadline for my business tax return. What can I do? Well, to be honest with you, really the only thing that you can do is file that one as soon as possible. Because yes, you're correct. I mean, yesterday was the tax extension deadline for business tax returns. So for 1120 C corporation tax returns, for 1120 S corporation tax returns, those were the due dates for the extension for those types of returns. For partnership returns as well. And if you didn't hit it, all you can do is file it as soon as possible. Unfortunately, you'll probably be penalized with late filing penalties. But hey, you can't go back, you can't change it. So all you got to do is just file it as soon as you can. Okay, moving right along here. I haven't filed taxes for my personal or my business. What should I do? Well, of course, it depends on the details here. First of all, it depends on how many years are you missing. Because to be honest with you, and here's some good nuggets of information here. Usually, so let's say that you're missing the personal tax returns. Doesn't necessarily apply to business so much, but let's say that you're missing the last 10 years of personal tax returns. You just haven't filed for the last 10 years, which I've seen that happen. I've seen situations where someone hasn't filed for that long. Typically, the IRS will only request the last 6 years of your tax returns. So, there's just 4 years to where you might even owe tax and whatnot. But they would just kind of not require those returns. They'd only require you to file the past 6. So that's a good nugget to keep in mind. But if you haven't filed taxes for your personal or your business yet, I mean, and the answer is very similar to what I said last question, is do it as soon as possible. File your excuse me, file your tax returns as soon as possible. So because like the longer you wait, the more your tax balances add up, the higher your penalties are, and eventually the IRS will come after you in some capacity. So good idea to just get them filed. Sorry, guys and gals, I have the sniffles, unfortunately. What's the criteria for being exempt to paying past due taxes? That's a very good question. And I wouldn't really, I guess I wouldn't put it that way. Like typically, no one is exempt from paying past due taxes. Like, everyone is required to, pay their taxes. But there are some situations to where, let's say that you've accumulated a big tax balance and you owe for multiple tax years. So like, let's say that for whatever reason you owe 100 grand or 50 grand or 75 grand, and just because you've got behind on your tax bill for several years and it's just kind of accumulated, there is something called, it's a program that the IRS administers, and it's something called an offer in compromise. And it's essentially what it is you send in a certain number of forms to the IRS. You send in financial substantiation, like financial documentation, and you prove to the IRS that you can't reasonably pay this debt anytime soon. So you say, hey, like with the amount of income that I have, I need most of this to live. I can't afford to pay this huge tax balance. If you can prove that and follow the requirements of the program and do the right calculations on the offer and compromise form and all of that, they will entertain settling out your debt. Now, they typically won't do that if you're making a lot of money. If you're able to pay the debt, like if you are making good money each month, or you have a lot of assets that you could liquidate and pay for the debt, they'll make you do that before they would settle out with you. So really, it only applies to lower income people, people that have some sort of argument to why they can't pay their taxes. So that's one way is, if you find yourself in a tough position, check out the offer and compromise program. Is it possible to avoid 100% of my income taxes? Well, again, I wouldn't say avoid, because you're not really avoiding these if you do it in this following situation. But so let's say that if you have a business, you're self-employed, and let's say that you have a loss with the business, in a certain tax year. And what I mean by a loss is, you spend more money than you make. That's what I mean by a loss. That's a way to not pay any income tax. You know, if that's really the only way. Well, that's not the only way, but that's a big way is to just, if you invest all the money that you make back into the business, and if they're all allowable, sort of business expenses that you can write off right off the top, then that's a way to not pay any tax. The income tax for the federal government, but you still might have, even if you have a loss, you still might have sales tax that you'd need to pay, payroll tax for other employees, and things like that. Here's a good question. How did we go from fighting a revolution on over a 2% tax to now paying high taxes on everything? Well, yeah, I mean, we did, well, when we say we, you mean the United States. They did, they had back in the day, they had a problem with being taxed without, adequate representation in the British political system. So totally, we had a problem with that. And now it does seem like taxes are pretty high. And I think what happens is, over time, rules and laws and taxes, they just kind of accumulate over time, as state governments come up with more taxes, local governments come up with more taxes, and of course, the federal government, they of course come up with more taxes. But I just think over time, it just kind of accumulates, and then we're left with paying a huge tax bill, unfortunately. Okay, I think someone is typing a question to me as we speak. Yes. I've made $80,000 on TikTok over the last 6 months. What would you recommend that I do? Well, there's a few things. If you've made like if you've made 80 grand through TikTok, for one, make sure that you're writing off expenses that you're allowed to write off. So especially, like if you're filming from home, if you do some travel specifically for business, just make sure that you're accounting for your expenses, recording them, and writing them off from your income. So that's really important, because you only really pay taxes on the money that you keep. You pay taxes on your net income. You don't pay taxes on the money you spend back into your business, most of the time. So that's really important. And then if you don't already have an LLC set up, then it might be a good idea to go ahead and set up an LLC for your business. And an LLC, of course, is just a business structure. And it's a business structure, a legal business structure that you set up with the state, your state of residence usually. And it kind of, it gives your business legitimacy. It provides a formal structure. You can get an EIN number and tie it to the LLC and stop using your social security number on, official documents, things like that. So that's something you should do, is probably get an LLC. And then you might want to consider going the S corp route, making an S corp election, which is what we handle here at Collective. We're an S corp company. But if you've made 80K over the last 6 months, you're well over you should be well over the income level that we typically recommend to go forward with an S corp. So, it could save you money. It could save you money on the self-employment tax. So, if you've made, if and just not even, excluding TikTok, regardless of what kind of industry you're in, if you've made that kind of money over the last 6 months, you should certainly look into an S corp. And just really quick, if that sounds like you, feel free to go to our website and schedule a call with us. Go send us a message on our social media accounts. We'd love to connect with you, and we'll connect you with a business advisor that'll go through your business, of course, see some good next steps, and kind of determine if you should think about going the S corp route. I'm a high W-2 earner employee. What can I do to reduce my taxes? I think the best thing that you can do to reduce your taxes, for one, save for retirement. Excuse me, my eye itched there for a second. But save for retirement. That's a big one. Especially if you're a high W-2 earner and your company matches for your 401k, save for retirement. Now, that's really, especially if you're a W-2 owner, that's the best thing that you can do, because a lot of retirement accounts, the money that you pay, it reduces your tax bill, while also allowing you to save for retirement, of course. So that's a big one. If you're W-2, you also, you can't write off any expenses really. That's really only for self-employed people, which is how they primarily reduce their tax bill. So for W-2 people, definitely, I would say explore retirement accounts. Can you find legal ways to reduce tax if you read the tax code? Sure. Sure, you can. And here's the thing about the tax code is it's complex. It's important to keep that in mind, of course. And I know that's not some grand revelation. I'm sure most people understand that the tax code is complex, but it is. And sometimes you could read something in there, and you could get a wrong idea about it, and you can think that it's proper for you to do that certain thing, but it might not be. And I'll give you an example. There's one strategy to where if you have a business, to hire your children. And what the strategy is, or it's not really supposed to be a strategy, but what happens is people will hire their children. They'll pay them up, they'll pay them a certain amount, and then they'll be able to write off that expense for their business, because paying, an employee expense is an expense, of course, and you can write it off. And then they'll throw whatever they paid their child into a retirement account for them. So it's a way for the business owner to save on taxes and a way for their child to save for retirement. But what some people though fail to realize is that the relationship, your kid needs to actually be working in the business, and the wage that you pay them needs to be fair and accurate to the sort of value and work that they're supplying for the business. So you can't just use it as a strategy. Like, you can't just pay your kids and they're doing nothing just to enjoy the tax benefits. You can only usually do that if you can prove that they're actually performing and working in the business. If you were to get audited, and you can't prove that, then you could get penalized, and the IRS wouldn't appreciate that. And so on and so forth. So my point with all that is, like, sure, you can find legal ways to reduce your tax, just by kind of reading the tax code, but just be careful, because like I said, there's a lot of things that you can read. You can read things online, you can read things in the tax code, get really excited about them, and get really excited about how much money it's going to save you, but it can get you in trouble financially. If you do it wrong, it could increase your risk for audit. So just be careful when you do stuff when you read the tax code. Is it a good rule of thumb that if you make under $50,000, you should have an LLC, and if you make over $50,000, you should have an S corp? Well, it kind of depends. It's not necessarily that simple. First of all, let's clarify something real quick, is that an LLC and an S corp are two completely different things. So keep in mind that you can start off with an S corp and then make an S corp election later on that LLC. So you have to have something like an LLC or some sort of business structure set up first before you can even file S corp tax election paperwork. So keep that in mind. But in terms of how much money you should make for each one, is, yes, like, if you're around 50K, you should probably be at the LLC stage. You're probably not quite ready yet for an S corp, just in my opinion, just because the entire point of an S corp is, or one of the big reasons, is to save on the self-employment tax. The 15.3%, Social Security, Medicare tax is what that is. So, but the thing about it, though, is when you do an S corp election, your tax administration now becomes a little bit more complicated. So you usually need to have help, from a tax professional or from a payroll company, places like that, and that costs money. So if you're at a certain income level to where an S corp isn't saving you beyond the additional administrative costs that you have for an S corp, then what's the point? You're just you have a more complicated tax situation, and you're not saving any money because of the administration cost. So yeah, I would say $50,000 is probably a little low. Here at Collective, we give a general recommendation of $60,000. $60,000 of net income, after your expenses, in a 12-month time period, kind of like on an annual basis. As long, and again, this is very general, it's not always the case, but if you expect to make $60,000 and do an S corp, you can also reasonably expect for the savings that you get from the S corp to be above Collective's fee for the year, to be above our annual fee, to handle the books and everything. So keep that in mind. When you're thinking about your income level and in the context of an S corp, the $60,000 mark is the magic number in our opinion. What does the government do with our taxes? Why does it seem like they don't do anything with our taxes? Well, for one, taxes kind of a big chunk of taxes just kind of go to funding our programs. So for like our Social Security programs, our Medicare programs, and then just the income tax goes all kinds of places. Some of it goes to the military for the United States military budget. Some of it goes to the Department of Transportation, the Department of Energy. It goes all over the place. So I know it might not seem like they're not doing anything with our taxes, but they definitely are. And some people don't agree with what they're doing with our taxes. Sure, that's totally fine. I can't really speak to that. But they're definitely doing stuff with our taxes. What are some ways to legally avoid taxes? Well, again, I wouldn't think of it so much as avoid because you can't avoid taxes. That's not legal. You know what I'm saying? Like that's tax avoidance. You can't do that. But you can reduce your tax bill legally, sure. And but there's several ways to do that. One are retirement accounts. There are certain retirement accounts for employed people, for W-2 employees, and for self-employed people that can reduce your tax bill. So that's a big one, is retirement accounts. Another one are business write-offs. If you're a self-employed individual and you have a business, you can write stuff off. You can write off business expenses from your business income, and that reduces your tax bill. What's the best way to save money? I hear bank accounts aren't good. Oh, good question. Well, I mean, here lately, especially because the Fed has kept interest rates so elevated, there's been some bank accounts that have been pretty good. So, like for example, and again, I have no relationships with these companies. These are not marketing statements. I don't officially endorse any of these companies. But for example, there was a time to where if you had an Apple credit card, you could they were offering a savings account, and they were paying out like 4%, 4 point something percent in annual interest. So that's pretty good. That's just a pretty solid interest rate. So right now, there's still some pretty good bank accounts or just saving accounts that are offering some good rates. But yes, there's some better stuff. One is called a CD. It's called a certificate of deposit or certificate for deposit, something like that. And essentially what it is you buy a certificate that says, like, for example, let's say that you buy a CD for $4,000. You get this certificate that says in so many months or so, and the amount of time that you agreed to just let me have your money, I'll give you back more money. So like I'll give you back, I'll pay you 4%, and I'll give you back $4,800. I mean, that's not the right math, but you know what I mean. That's what a CD is. And usually CDs have more they have more advantageous interest rates. You can make a little bit more money on CDs usually than you can with bank accounts. So that's one thing. And again, I am not a financial advisor. I'm not an investment specialist. So, it's always a good idea to talk to a licensed professional before you do anything. But another good way to save money is a safe collection of stocks and bonds, a really safe, diversified collection of stocks. That's another really good way to save money. And usually, just historically, especially if you keep it properly diversified, that sort of situation will save you more money than just interest rates and bank accounts and CDs and things like that. It's not guaranteed, of course, but historically, it's usually done quite a bit better. Oh, here's a really good question. What's the difference between tax deductions and tax credits? Well, there's a big difference. One, when you hear tax deduction, that means business expense. That means a business write-off. It means that you can deduct a certain amount of an expense from your income. So a tax deduction lowers your income. A tax credit reduces your tax dollar by dollar. So for example, like let's say that you have a $20,000 tax deduction. That means, and let's say that you make $100,000. That means that you can write off $20,000 from that $100,000, and now you have $80,000 in net income. That's a tax deduction. A tax credit. So let's say that you owe $10,000 in taxes for a year, and let's say that you have a $3,000 tax credit. You get to take $3,000 off of that $10,000. It reduces your tax dollar by dollar. Now, also the thing about tax credits is that there's non-refundable tax credits, and there's refundable tax credits, which means, so let's say that you owe $10,000 in taxes, but you have, $12,000 somehow in refundable tax credits. That means that you get, not only do you not pay any taxes, but you get $2,000 back to you as a tax payment, just because it's a refundable tax credit. That's just kind of how the way we do our tax system here. Now, there are some non-refundable tax credits, which means it'll only reduce your tax to zero and it won't give you any money back. But still, tax credits are fantastic. I mean, they reduce your tax dollar by dollar, and they're usually better than tax deductions. Here's a good question. Will Trump's tax policy make us pay more? To be honest with you, I have no idea. I know this is kind of bad, but I haven't really been keeping up with the political stuff, you know? And I probably should be, of course, but yeah, I just haven't really been keeping up with it. So I'm not really sure the details of his plan or anything like that. So I won't be able to help you there. Good question though. Okay. Can you explain S corps a little bit more? Sure, absolutely. Especially since Collective is an S corp company. Um, Long story short, one of the big reasons why you might want to make an S corp election is to reduce your Social Security and Medicare tax. In other words, your self-employment tax. And before you become an S corp, like when you're just a sole proprietorship, or an LLC, then a big chunk of your money, or all of your money, all of your net income, could be subject to the self-employment tax, the 15.3%. But what happens with an S corp is you become an employee, essentially, of your own business. Like it creates an employee employer relationship, between yourself and your own business entity. So then you pay yourself a salary, and now only that salary is subject to the self-employment tax, or the payroll tax, or the Social Security Medicare tax, whatever you want to call it. But that's the main benefit of an S corp right there. And unfortunately, that's all the time that I have today. This concludes our Tax Tuesday session. But it was very enjoyable. You guys and gals have great questions that you asked every week. And I'll be here next week for another session. And like I mentioned earlier, if you thought this was useful, if you think an S corp might be in your best interest, or if you think that Collective could be a good fit for your business, feel free to schedule a call with us. Go to our website, schedule an introductory call with one of our advisors, and we will give you some good next steps for your business.